agents, and welcome to the sixth edition, the very best edition of the One Bite at a Time show, where we research the most relevant information you need right now in your business for growth. And we bring it to you one bite at a time. It'll be a searchable database on the Vintage Mortgage Firm YouTube channel, where you'll be able to find any information you want over time. Today's the sixth edition, and I'm excited about talking to Roxann today about renovation loans. So Roxann, let's talk about that for a few minutes. What exactly is a renovation loan?
A renovation loan is a loan where it allows the financing of improving the property and being able to use the future value of the property after the renovations have been completed. So it can be conventional, there's a home style, choice renovation, it can be FHA, limited and standard, USDA limited and standard. Those are for purchase only. And there's also a VA renovation loan.
And what kind of properties can you do a renovation loan on?
It can be done on all property types, although some of the different types of loans do restrict manufactured homes or condos, but there is one out there for all property types.
Roxann, can this be done on primary residences only, or can this be done on a second home or an investment property?
So most of the products are for primary residence only, with the exception of home style and choice renovation, which are both conventional products. Those can be used for second home and investment property. Lots of renovation products have both a standard and a limited, which is basically limited is a partial renovation. It would normally max out at around 30 to 35,000 of the repairs, and it cannot be done with anything structural. So as long as it's nothing structural, the costs are less than 30,000, but all the work needs to be approved within that 30-day window and then completed within 6 months after. If you did a full 203K loan, it can have structural items in there. The trick to this is that the permits and plans need to be paid for and approved before a purchase can be completed. So a lot of the times renovation loan for purchase with the full structure isn't always the best option, because you're basically having a buyer pay for permits and plans out of pocket. So it's normally not recommended unless maybe you're doing some type of like a non-arm's length transaction with family members. That's when I can see something like that.
Okay, so Roxann, I know that everybody talks about remodel loans as being difficult to close. A lot of realtors look at remodel loans, especially listing agents. They look at them like VA loans and down payment assistance loans. They're just not so sure they're going to close. And there's a lot of loan officers out there today that haven't done very many of these, and they don't close them right. So tell us why is it people have that concern about these types of loans, and what can we do to mitigate that?
Well, the concerns are very valid, because that is definitely something that does happen. A lot of it has to do with the actual contractor being approved with getting the work done. When I look at these, the easiest way and most comfortable way to get these offers accepted, or even be an agent comfortable offering a renovation loan on a purchase, is sticking to the non-structural type renovations. That the contractor and what needs to be done just needs to be approved within the 30-day time period. Contractors that are through Lowe's and Home Depot, they're very familiar with this process, the type of paperwork that needs to be provided. So as long as the person is not trying to do it themselves, or, I know a guy that knows a guy that wants to do the contracting, as long as we stick to maybe, validated contractors, again, through companies like Lowe's, Home Depot, or they have a HUD consultant, that will definitely streamline this process. As far as a listing agent accepting a renovation loan, again, as long as the renovations are non-structural, that means the buyer doesn't have to go get plans and permits prior to getting the type of renovation approved. So it's more likely going to go through, and that listing agent and seller, it should have no bearing on the actual renovation. The person is going to qualify just like a regular FHA loan, a regular conventional loan. And the renovations itself will have no bearing on the purchase outside of making sure that that contractor is approved and the work that needs to be done is approved. But the work doesn't have to be completed or funded for the seller to get their money.
Okay, so just to make sure everybody understands, can you close on a purchase transaction with a limited remodel loan purchase within 30 days?
Yes, sir.
Okay, and the key is, if I understood you right, the key is having the contractor know what he or she is doing and be able to put together the paperwork in the way it needs to be put together so that the loan can be approved, correct?
That is correct.
And once it's approved, that's the big hurdle. Once it gets approved, then it's just a matter of closing just like any other loan. No or yes?
Yes, once it's approved, that is your biggest hurdle as far as a renovation loan, and everything else will close just as regular. As far as the renovation portion, that will be done after the seller already has their money and title has been transferred.
If someone is going to sell a home, let's say a home that's really in bad shape, and the only way it's going to sell or inspect or clear an inspection is if there's a clear remodel loan. It's the only way it's going to sell is a remodel loan or all cash. So it's on the market as a remodel loan. We know there's going to be some restructuring. Maybe there was a fire damage or whatever. So often those escrows are expected to be, 3 to 6 months or 2 to 3 months along. What do you think?
Yes.
Yep.
What was the question other than what do I think?
Yeah. What was the question again?
I'm all about what?
So tell me, how would someone know if a remodel loan or 203K loan is right for them?
Well, first they have to look at the types of repairs that they want completed, and then they have to look at their time frame. If the seller has to vacate the property and they don't have funds to fix it up for a traditional sell, this is a great way to get a buyer in order to purchase the property and do the work to get it in a sellable position, but obviously they would be occupying it as their primary residence.
Another question, is there ever a situation where someone can do the work themselves?
So unless they're a licensed contractor, licensed and bonded, insured, and can go through the pre-approval process, then yes, they can do the work themselves.
So obviously this can be done on a refinance basis too.
So I'll just give you a scenario of what it would look like if someone were to do an equity line of credit. Let's just say the property value today is at $500,000 and they currently own $350,000. We know that at $500,000 as a bank, if they're going to get an equity line of credit, they normally can only get 80% of the loan to value. So 80% of the 500,000 would be 400,000. They already owe 350. So if we take 350 from the 400,000, they only have access to a $50,000 line of credit, an equity line of credit available to them. The way a renovation loan for refinance is more beneficial. So let's say you were going to do $250,000 of renovations on your $500,000 property. We're going to use the future value of $750,000 of what your home would appraise for after the repairs are completed. 80% of that $750,000 is $600,000. And remember, they already own $350 on that property. So we're going to take 600 minus the 350, and that's going to be $250,000. So you'll have $250,000 available for renovations if you do a renovation loan for the future property value instead of doing a line of credit for the current property value.
When they're all done, do they have a regular loan?
Yes, they have a regular loan, depending which renovation loan they go with. If it's VA, FHA, conventional, that loan would be available to them based on the terms that they signed for.
So I just want to make sure I understand this, Roxanne. Tell me if this is the way it would work. If I was buying a home for $500,000 and I wanted to put $150,000 into it, or at least I got a contractor, gave me a bid for the work that was necessary, it's about $150,000, and then we believe that after the work is done, the house would not be worth just $650,000, but it would be worth $750,000. So I have to put in 3.5% of $650,000.
Yes, and
All right,
you
so
gained 150,000 or 100,000 in equity.
all right, so I get that. And if that amount was higher than the FHA loan limit, we'd have to reduce that to the FHA loan limit, but then potentially we could switch it to a conventional loan and go higher and use the same kind of scenario, but it would be more like 5% down. Is that correct? Or is it 10% down when it comes to a conventional remodel loan? Do you know?
It's 5% down, but they still hold the 3% first-time home buyer if you're going Fannie or Freddie.
Okay, so there's a lot of moving parts in here. So the important
Yes.
thing is be able to get a hold of a client, get a complete application, analyze the entire situation, and then let them go shopping for a home. If they find a home that needs remodeling, make sure that they understand that they can do a remodel loan. If they find a home that needs remodeling, then we're going to look at that particular home in relation to the remodel loans that are available and the options that they have available to them. And we're going to make sure that they're going to be able to do the remodel loan if that's what they want to do. That's correct, right? Roxanne, say uh-huh.
Yes, that
Yes, Steve.
uh-huh.
All right, so Roxanne, tell us what kind of interest rates these people might have to expect with this type of a loan for remodel financing.
So again, depending on which program you go with, you're looking about 3/4 to a point higher than whatever the standard rates are for that day.
So then they could refinance after 6 months if they wanted to too, right? But the whole idea is they'd be stepping into a lot more equity.
That's correct.
But of course, they've got to deal with the stress and the anxiety of remodeling a house and contractors and builders and things like that.
Yes, by all means. I always say that everything comes at a cost. So although this may sound appealing and this, and that, there's always something that causes people to not want to do certain products. So with this one, it's just another bite of our elephant to know that it's out there. You may have someone that fits that box, a seller that is patient, or a seller that, doesn't have the funds, and you have a buyer that really wants to get this property when the seller doesn't have the funds to fix it for standard financing. And it's just a nice little loan to marriage the two.
All right, so I have some experience with these types of loans, and I can say that some of the biggest challenges that I've realized in these is invariably the buyer wants to do the work themselves, and they really can't. I mean, there's some exceptions to that, but it really kind of throws a wrench into the process. And then, of course, sometimes they have a builder themselves. They have a builder that wants to do it, and they can save a lot of money, which is, again, possible with some exceptions, but throws another wrench into the process because that builder probably doesn't know how to actually structure the bid and everything so that it gets approved. And I see that these types of programs, often we're 3 weeks into the contract and we still don't have a contractor bid that is going to work for the lenders or the underwriter to be able to approve the loan. So does it make sense for somebody to hire a 203K accommodator or HUD consultant, as you mentioned? Does it make sense for somebody to hire that person? How much does that person cost or take in the transaction? And would that make the transaction possibly go faster?
For the limited 203K, they are not required, but they are highly suggested, and they can be included in the financing for the full 203K.
So hiring a HUD consultant might be the best way to move it forward if you're trying to close within a 45-day period of time, which is very fast on one of these. For sure. It's another product. I like what you said, Roxanne. It's another bite at the elephant as far as understanding the tools in your repertoire. That's what repertoire, is that the right word? Repertoire?
Repertoire, yeah.
Repertoire, your quiver. Make sure that you have all the tools in your quiver when you're out there talking to people. And of course, remodel loans are available. We do a regular consultation for them along with a regular application in the process. I know that a lot of loan officers simply do not like these types of loans, but we can do them. We do them well, and it's a matter of making sure everybody's on track, doing the right things, and we get that bid in relatively quickly. If we're 2 weeks into the transaction and we don't have a bid yet, then we need to start telling people we're not closing on time. So Roxann, why did the construction worker get off on a murder charge?
I don't know why.
Because there just wasn't enough concrete evidence.
How do construction workers party?
How do construction workers party, Roxann?
They raise the roof.
What do builders like to listen to?
I don't know what.
The Carpenters. Hey, Roxann, here's a great video of construction jobs that have gone bad.
Any place you would be is certainly so perfectly good for me that any old hammer and nail I buy just makes a sign on sunshine, settling in like doves, discovering the wonderful heights of love. A little brush and polish and you'll see what I mean. We're sitting on a dream. Step through that door, you'll see a grand room with a view and a new moon for two out there. And just like clear water from those summer rains, don't you know, champagne will flow. Gold as a ring upon my finger, any stair we could climb has got to be to heaven and so divine that all we'll ever have to do is lie around and watch the stars above us fall down. We're calling this nest our own and telling all the others it's home sweet home. If we were any cozy after this, we're both sitting on a dream.
How's it going?
Fine. Sit on your face.
The ceiling seems to be coming down in the bedroom.
Oh, well, I'll get to that later. I only got 2 hands.
Okay.
Okay. Ah! Oh. Oh. Mm. Mm. What the hell was that?
All I did was turn on the water.
That's all? That doesn't sound good.
No. You should see I guess it's the water. I don't know, it's revolting.
Okay. So the plumbing's not perfect. We'll get it fixed. It's not the end of the world.
You didn't see that water.
Look, this is an old house. It's gonna need some work. You've got to expect that.
I didn't expect that water. It had legs.
A little work, a little care, a little imagination, and it's gonna be great. It's gonna be fun fixing it up. You'll see.
I don't know Walter, I've never been any good at that kind of thing.
What kind of thing?
Work.
Well, you can't go into it with that kind of an attitude. You gotta be more positive.
I'll try.
Oh.
A little care, a little imagination, and a positive attitude.
What was that?
Nothing, dear.
Honey, you're on my fingers.
Oh.
And here's Steve with your market update.
And remember, folks, we always quote interest rates with no lender fees and no points whenever possible. Rates have gotten a lot better since the last time we talked, folks. We've actually got a super elite jumbo product, 80%, that's 20% down, high FICO scores, 5.125 to 5.375. Regular jumbo rates, 5.6 to 5.8. Conventional, 5.1 to 5.375. Gee, that's the same as the super jumbo elite. Also, VA FHA is 4.3 to 4.5%. That was your quick and easy market update.